Take a look at how many people are invested with leverage, with margin, and have a mountain of debt behind them. It's a recipe for disaster. You came here for the truth, so let me unveil that for you. Today we're going to cover what's been happening in the markets. I think it is important to see the rotation, looking at what's going on with commodities, and then of course see what's going on with the small caps. I'm going to actually give you a little bit of analysis quickly as well. I've got a new tool that I want to share with you and try to bring that out regularly if I can, if you find value in it. So we'll see that today. I've got updates on, of course, the repo crisis. We've got to look at what Icahn has been doing with betting that the malls are going to die, and we clearly know that that is the direction they're heading. I want to talk about GameStop and AMC and all the meme stocks and the economic factors. There's so much to cover, and of course, not enough time. Let's get into it right away. Another day, another repo. In this case here, reverse repo operations directly from the New York Fed's website. You can see, if you can, with a small font, it is $450 billion. This is the highest it has ever been, not on a quarter end, and I believe the second highest in history. It's only going to take a day or two to get us to the highest ever. Why is this happening? It's because the Federal Reserve had been going into the markets and buying up the treasuries, the mortgage-backed securities, and dislocating everything that is supposed to be there. It's a market. The market is supposed to have buyers and sellers, but when the Federal Reserve comes in, they mess it all up. Of course, there's so much more to it, but I think people need to just understand the basics, that this is messed up. It's screwed up, and it's not going to be resolved by more Federal Reserve activity. And yet that's what they're going to do. We're simply waiting right now for a press release or an official statement to come out from the Fed so that it can calm the markets down, so that it can get everything going again. I'm sure they're going to make some adjustments on their end, and then they'll wait and see. At this time, they are becoming not just the buyer of last resort and the lender of last resort. They're becoming the everything. Everything. They've got their tentacles everywhere, and that is never, never a good sign. This right here is talking about Icahn and the credit default swaps that he's got. These contracts provide protection like any insurance contract, but don't impact the businesses of tenants or malls. So Mr. Icahn's moves don't have a bearing on whether landlords make their loan payment. Okay, it goes on. So far, he's lost millions on the trade, but he hasn't backed off and may even add to his bearish trade that he considers a long-term position. They go into more details. What we're talking about here is the CMBX6 specifically. I've covered all the different ones, and there's the one that has more multifamily in it, and one that has these are derivatives, of course, looking more at one with malls, and one's got retail and office and so on. Okay, so they're all broken down into these different pools, and he's looking at these ones specifically. Why? Because there's too many malls, there's too much debt around them. So you see a mall, and I think a lot of people don't understand the concept of this, but somebody has a lot that they owe on it, and so they do an addition, they do construction, they add to it, they make it better. That's done with debt. It's financed with debt. It's not as if some rich company comes out there and they simply pay for it. They pay for a small amount, and the rest is financed by debt. But then you've got it connected to all these derivatives, and you realize that these things are not going to be paid off when the people or the businesses inside of them aren't paying their bills. So you've got an issue. So that's what he's been up to right now. My big bet against these malls still stands. In fact, it is currently one of our largest positions on a risk-reward basis. I believe my short bet on these malls is about as good as you can bet you can make in today's dangerous markets. I mean, so many things are uncertain today. Is this one that you think personally is more of a sure thing? You tell me. I'd really like to know what you're thinking about this. And this here is his talk about cryptocurrencies, saying he wants to get into cryptos in a big way and may eventually put more than $1 billion into an alternative currency, suggesting that he likes Ethereum. So he's doing his studies right now. I think it's important to note, and the reason I mention this is because you've got a lot of big investors that are getting in. It's not somebody putting $60 into their Coinbase account. We're talking about billions of dollars being pushed in. It's interesting. It's completely different than what we've seen before. And of course, I think it's just something that people should be aware of, how it's all working, where the money is flowing. So this is part of a few things I'll show you in just a second. I got some charts. GameStop, AMC Entertainment shares soar as meme stock rally returns. You had heard about this a few months ago. The stocks were going crazy. Companies that you hadn't heard of for years and years, and everything was going out of control. Analysts say the jump has likely been driven by a cross-current of factors that have prompted individual traders to pile in. There's more to it than that. Let me just show you a few things. The most shorted stocks. So going from April into May, these started declining quite a bit. In the recent past, they've been increasing. This is the Wall Street Bets original short squeeze basket throughout May. They've been climbing as well. This is showing you the Russell 2000 small caps, which of course have been up and down. Most recently, they've been able to break through the 50-day moving average. So that hopefully for those invested in this will have this as a support line. And it's been meeting there at resistance. So we'll see if it's been able to do that. And this time frame is basically throughout May, what you're seeing here, April to May. So we're going to have to pay close attention and see what happens over the next little while. Okay, so let's have some fun here. What we're looking at is basically a few things I've got prepared. We've got AMC up right now, so we'll focus on that. In the top right corner where we're looking at here, that's basically, over the last period of time, like since the beginning of January, and you could see that the stock was a couple bucks. And then it skyrockets up, and then it's been fluctuating throughout this period. And right now it has found its way, this is the daily chart right here, almost at $20. So from, basically a 6-month period, you're seeing the stock moving up to these crazy levels yet again. So some people have been getting in and out of them. Some people have been able to get out that kind of peaked out at this point and then came back down. You're looking at a lot of stuff on the left side. I realize that, and this is something that I want to cover, and I'm going to talk about the technical indicators in separate videos. But essentially what we got, the one that I want to cover for this is the volume, and you could see how it has surged. Absolutely surge. If you could see where the mouse is right down here, I'm just trying to focus on. It is unbelievable to see how much. In fact, I believe AMC was the highest volume of any stock, going absolutely ballistic. GME in this case here, GameStop, same situation. It hasn't reached the peak that it did previously. And also, as I covered, small caps going wild right now, at least in the previous trading session by the time you watch this video. And you could see this period of time, it had moved up. This is the Russell Index, and it had moved up quite a bit. On the right-hand side, we're seeing since the beginning of the year, and it has come up as well. So there has been a lot of differences that we had seen, with First Technology, and then we looked into, some of the other types of stocks that were taking place throughout 2020, and then the small caps had their turn and so on. So these are always in flux, but I just wanted to give you the details of what's been happening right now. Of course, that's in conjunction with what we see in this Bloomberg article. Small caps take the lead in broad stock rotation. This is always going to be up and down, so don't necessarily look at this article and then 3 months from now you think that's still the case. That's why I cover this information every single day. From corn to copper, commodities cool off with China in focus. Remember the China credit impulse. I've done multiple videos about it. I think it's extremely important. Weather and China demand and supply concerns may drive volatility. Market isn't for the faint of heart, says agricultural consultant. So we are looking at the commodity spot index, includes energy, tumbled 2.4% in the past 2 weeks, trimming returns to 19% for the year. So it's still very high, as you can see, but it's come down off its peak. We've seen lumber off its peak, moving from something like 1,700 down to something like 1,200. I don't have those numbers in front of me just by memory. So we know that certain things that had gone crazy initially have come back down. Does that mean there's no inflation? No, of course, because the companies are still going to pass that on to you. So all that matters is what it means to you as the individual. They do talk about more factors here, just saying it's not just crops, including soybeans and canola that are seeing a downturn. Copper, iron ore, and steel have slumped since China introduced various measures to contain the rapid surge of prices for industrial commodities. Copper, viewed as an economic bellwether, fell from a record high after Beijing's mid-May move last week posted its worst week since September. So we're going to have to see ultimately where this takes us. There's a chart that corresponds to this. Commodities cool, choppy market has trended downward. And that's just giving you some insight as to what's been going on. This right here is just trying to highlight the fact, because I wanted to move into this. We're talking about what the Federal Reserve has been doing, and essentially the market is really, truly relying on what they have done to continue that. And the market believes that this continues forever and ever and ever. So let's break this down really quickly. Number one, meme stocks are back. Now, what does that tell us? It shows you that there is all kinds of leverage and risk taking and pedal to the metal on everything type of mentality. That's all it's telling you. It doesn't mean that certain stocks aren't worth what they are priced at currently and so on. It just shows you the mentality and the psychological behavior of some investors today. And that brings me to point number 2. You need to understand that for money to go in, it's got to come out of somewhere else. Where is that money coming from? Is it coming from cash into these stocks, or is it moving from, let's say, growth stocks into small caps or into meme stocks? Or is it, going to go into ETFs of broad indexes, or is it going to go into commodities? Right now, it looks like some of the money has left commodities and made its way into the small caps. I'll keep you up to date on that. And that's part of what I wanted to share for number 3. Commodities have fell from their peak. That doesn't mean inflation is not on the table and everything has changed. It means that things got a little carried away as it relates to the prices. So we may have to pay close attention to it, because this is going to tell us what happens. Commodities are an extremely important part of the overall economy around the world. If suddenly you've got to pay too much for something, maybe you start to seek alternatives. So it depends on what that is. When lumber started rising like crazy, the others started to, say, well, maybe we should start using steel and different types of metals for these things. But of course, that went up as well. So I'm always keeping an eye on that. You can rest assured, though, that the Federal Reserve and all the governments around the world are going to impose the policies that continue to devalue the currencies, which of course makes things look much more expensive. This is a really important note. You're looking at the Fed balance sheet and the US Treasury 2-year, 10-year yield curve. We haven't talked about this in a while, but I found it to be interesting, specifically if you look right here, in the past, just this one for an example, right here, going from, the whole taper tantrum, 2013 into 2012 into 2013, going back here again. I find it interesting that when you see the introduction of QE, it happens to coincide generally with these periods of time. The yield curve, as you can see right here, look at the yields. So they start falling, and then It's only on the way up that we get this introduction. It's just like the recessions. It's on the way up. It's not when it hits its lowest point. It's not that it continues down further and further through the period. It happens on the way up. So that's what we're seeing now. We see clearly, very clearly, that this has started to rise higher and higher. We'll see what happens. I wanted to conclude with this really quickly. It comes from Real Investment Advice. Summary. We know it may sound crazy to stock investors that when we say fade the Fed, the stock market has taught equity investors to buy when the Fed is buying and to careful when they are not. What stock investors may not know is the poor performance of bonds during QE and the strong performance afterward. And they make this point here. Bond investors should sell when the Fed is buying and buy when they are selling. They give you some details here. I think it's really just something to wrap up the video with. I think it's important for people to know what the Federal Reserve is doing at any time, as I talked about with the repos, obviously, and trying to bring this all together. It's really key to keep an eye on them because, quite frankly, they are the head of the snake. Look, this right here is so key, it's so important. Thousands of people have already joined up to the insiders. Why? Because I continue to know and hear from you that you are not getting my videos. You don't get the notifications, you're subscribed, you got the bell, and yet you don't see it. If you sign up to the insiders, it's simply going to email you 5 times a week. You're going to get the email into your inbox, and that's going to be able to notify you of the latest video. It guarantees that you get the latest video instead of trying to rely on this platform, and we know how unreliable it can be. If you found the video informative, hit that thumbs up button. I really do appreciate that. And if you haven't seen this video already, you definitely want to click on it, and I'll see you there.